One. Good morning, everybody. Welcome to Phoenix Trading Strategies, where strategic knowledge and information allows you to trade successfully. Today is October 30th, 2015. It is 9:06 a.m. Eastern Time. For those of you that are here for the first time, welcome. For those of you that are back, welcome back. It is a very, very nice day. It's Friday. We always look forward to Fridays. They're always very special. They have a special place in our heart because it's the weekend. And here in the U.S., we get, I believe it's daylight savings time. And come Sunday, we're going to get an extra hour of sleep after Sunday. Woohoo! So before we continue, let's go to the disclaimer. Disclaimer: future stocks and spot currency trading have large potential rewards, but also large potential risk. You must be aware of the risk and be willing to accept them in order to invest in future stocks and forex markets. Don't trade with money you can't afford to lose. This website is neither a solicitation nor an offer to buy, sell future stocks or forex. No representation is being made that any account will or is likely to achieve profits or losses similar to those discussed on this website. Past performance of indicators or methodology are not necessarily indicative of future results. Being that said and done, welcome back. Every day I have $1 to trade. It's a birthday. That's right, buddy. Thank you very much. It's always a birthday. Indeed, indeed. Well, let's go to the calendar and see what we got, because it is Friday. And non-farm payroll is next week, not this week. So we've got let me see. We had some bad news come out. Core PEC price index came out less than expected, 1% negative. Personal spending month on month came out negative. Personal income came out negative. Gee, go figure. But the economy's doing great, you know. I mean, the Fed says so. Chicago PMI is going to be coming out within the next 40 minutes, or 38 minutes to be precise. That one should be interesting. And then we have consumer sentiment at 10 a.m. today Eastern Time, inflation expectations, and we have Williams speaks from the FOMC. So it's interesting to see what nonsense he has to say. Well, it does drive the market, so we'll be watching him. We'll be watching him. So yes, 9:45 a.m. is the next hit that we're looking for. So let us go to the charts. You know, I got a student of mine. This kid is just, he really knows how to pick them sometimes. He really picked this one, the EuroCAD. He said it was going to go long, and we looked at this and had all the elements. And today, because it is my birthday, we're going to go over the indicators, uno by uno, one by one. How's that sound? It's always nice to do a recap of everything. It's a beautiful thing. You know, I really wasn't going to show up, but then I said, it's my birthday. Who better to share it with than the traders that I do business with? So let's go over this. It's a beautiful thing. We've redesigned the strategy. We've taken it to a whole other level, to a level that even institutional traders themselves don't know. And I know this because I've talked to a few this week. It's amazing how one movie can define the reality of a trade. What is that one movie? Wall Street. You know, the famous Gordon Gekko statement that the most valuable commodity that he knows is information. He's right. In this case, it's numerical, digital information. It is the one thing that everyone needs nowadays, but more importantly is time. Can information give you time? Because you can't get that back, but you can definitely take advantage of it when it's given to you. And that's the one thing that I think that we have finally accomplished, is that we created an algorithm that was already in the back of my mind because it was, but I could never really pinpoint it and always evaded me as to why. I just, and it was, I have to admit, it was a client that turned me on to the concept. And when we created the equation for it, then it was just like a perfect moment of bliss. When you're in that one perfect trade, and they say that you're in that trading zone, that's exactly where I'm going to take you now. So let's take a look at this. Let's go over the no audio, really? No video? You should have video. Does everyone else have video? A simple yes will do. Yeah, okay, very good, very good. Thank you so much. So it's your computer, John. Log out and log back in. Thank you so much. So let's go over the indicators. Let's go over our primary indicator, which has always been the power dots. This algorithm announces two important things that we never forget. This one, these golden dots here, announce that we have time, that we have volume and momentum buildup coming into the market, and that there's a trade coming in. Now, the one thing that when we do see this algorithm come into play, it does give us that. It gives us time. And before, we used to wait 4, 5, 6 candles where the dots had formed in order to make a trading decision. Why? Because we were looking for a conservative entry. Not even a conservative exit, but a conservative entry. Now, we've taken it to a whole other level. So let's stay with that, and let's go over the rest. The trend dots are these red dots that you see where the candles are trading, and these cayenne dots or turquoise dots where you see these bullish candles trading, like right here. These are trend dots. These little plus signs here are a trend stop. And they actually can show you why they're a trend stop, because the minute that this trend is broken, the trend changes. However, we do not make our trading decision based on that. But it's a very good visual that keeps us in a trade, and that's what it's supposed to do. It was never meant to give us an exit strategy or an entry strategy because it's late, but it was meant to give us a continuation of a trade once we're in it, because many times we get in it with this algorithm. So the little purple dots, these are pivot points, and these are very important because they map out the next level, the next price level that the trade is going to. Now, we could never really forecast how far a trade was going to go. That was something that evaded us. Now we can, and I'll show you why. But we're not there yet. We're almost there. The sentiment indicator, which is this one here, and this little bad boy, what it does, basically what I use it for more than likely, is if I'm in a trade, and let's say I'm long, in this case, let's say I went long here, and I went long here, then as soon as this thing goes bullish, then I move my stop loss, which may have been down here to a break-even point. That's how I use it. No other reason beyond that except to keep me disciplined about moving my stop loss. It's not going to give me an entry that I'm looking for because it was never meant to do that. It's a heat map. Our second pride and joy is our volume indicator. And the volume indicator does many, many things. It shows you the dashes, for instance, there's a 50% line which runs right through the middle, and it shows you if the candle has had a tremendous amount of volume, because if you go from point to point, you can see here in the right, the highest point here was 438 million. The lowest point was 465 negative million. on the negative side, and it settled right below the 50% line at negative 20 million. So this is a bullish candle with bearish volume. Ooh, that's something that doesn't make sense, huh? A bullish candle with bearish volume. Can something like that exist? Yes, it can. So now you can actually define with the volume indicator whether that bullish bar is actually bullish or if it's really bearish. Is it important information? Yes. Will it help you make a decision? You betcha. But it is not all that, because it's very hard to find volume divergence in this. There's too many of them, so you don't know where to begin. But now we have a new pride and joy, and this new pride and joy is called the Phoenix Price Identifier. And this little algorithm, you see these little dashes in between the candles, the green ones and the tomato red looking ones? Well, these little dashes are real bad boys. And I say that because the beautiful thing behind this algorithm is that it tells you the price where the buyers and sellers prefer to buy and sell at in that candle. Oh my God, it was it was such a beautiful thing when I discovered it that I slapped myself a few times. I'm not kidding. It was so joyous because I could not believe that we finally did it, that we finally reached and completed the circle of information. And what is the most valuable commodity out there when trading? Is information. In this case, it's digital information that we're looking for, because the human mind and I cannot compute all this information in one. It's impossible for us to do such a thing. It just can't be done. I know, I've tried, and I've got pretty good eyes. And granted, I'm only 44 years old. I'm getting a little old. I'm not old yet, but I'm getting there. Once I reach 50, then I'm downhill. But I'm not there yet. I still got 6 more years. However, this algorithm is now showing us an imbalance in the candle. What is an imbalance? Well, when the power dots show up, now we can actually tell if it's really going to go short or long, and if the trend is going to continue, because we can determine if we can forecast if the trade is actually going to continue in that direction. How can you do such a thing, Ricardo? Please explain. Well, you see how this power dot formed right here? We go back 1, 2 candles now. Now, why is this important? Well, it's very important because we're looking for evidence that the sellers are going to start to slow down their selling, their offering, and that they're going to stop the trade from going any further at this price level, which is 144.61 here on the EuroCAD. So what they did is that when they formed here, the buyers formed here because they're bidding this up. They want to take this up. There's no tomorrow. So now you can actually see, which is something very, very unique, something that we had not seen before, is volume divergence. We knew that it was there, but we could not pinpoint it exactly. Well, now this is your starting point, this candle. Why? Because they're going to slow it down. You see, even though it doesn't have a dash, what that means is that the dash is at the very bottom. And it's a programming issue, so I do apologize for that. We have sometimes these candles that just don't show, just like this one here. See, it also doesn't show the dash, but it's at the bottom. So what it means is that there's a discrepancy, an imbalance between the buyers and sellers in that candle. That's a strong statement, and one that must be supported numerically. So what does that mean? That means that the buyers prefer to buy up here, but the sellers prefer to sell down here. Well, the next candle showed the same thing, that the buyers only slowed down their purchasing power, but the sellers slowed down their selling power as well because it formed right smack in the middle of the candle. And so they said, we're going to stop this. And then finally, our pride and joy forms, the power dot formation. And then this one basically just stops the whole thing. Now, when you have the first power dot and you go back 2 candles, if you see that the imbalance began 2 candles ago, you got a 2 candle warning before they go short. 1, 2, short. Now, we know before we would wait for the 4th or 5th candle. Why? Because we were looking for a conservative entry. We were waiting for price action to break below the trend dots before we actually took a trade. Well, now, if we know that this is going to happen, we can actually pinpoint a better entry at the very top of this bad boy and know that they're not going to go above more than 10 pips against the power dots when they do initiate that trade. So now the imbalance that we're looking for is this is not well, actually, this is a real imbalance. Now I'll explain why. You see how here they initiated the short trade. So they came down and went short, right? Well, now you have something else to confirm that, which is volume. The data box shows the imbalance. But let's begin here. What did we have here? 151 million on the buy, 151 million on the sell. I mean, damn, it's perfectly balanced. Yet the price action drove the candle, but it held. What happened here? You had 230 million on the buy, 212 million on the sell. So you had a difference of 19 million orders that did not get filled. Why? Because the seller said, I'm not selling you anything above this price level in this candle. I don't care what you say. And then the previous candle, you had 87 million on the buy, 48 million on the sell, difference of 39 million. So they had 39 million in orders that did not get filled by the sellers because the buyers wanted to drive this up further, but the sellers said, no, I'm not going to fill your orders. But the buyers continued to drive it up until now. So now when we see this imbalance here, then we know that we're able to forecast that we've got a 20-minute window before they turn, twist, and burn the direction that they were going in. So now that makes it, why is this candle important? Well, because see how the buyers can basically conceded to buy at a lower price after being up here? By them giving up control, which is exactly what they did, they basically accepted that the sellers could take this trade short. So there's always been a theory, do they communicate amongst themselves? The answer is yes. And now we can prove that. Couldn't prove it before. It's very hard to break the Morse code, but I think we did it now. We're right there. So what happens in the next candle? Well, they went long, but why is there an imbalance here? Because the buyers are here and the sellers are here. So what does this mean here? Well, if you look at the volume, they're still rebalancing their bullish position because they are going to go short. So the sellers are giving the buyers the opportunity to get out of their bullish positions and offset those orders before they basically stick it to them. And so that's exactly what they did. So you can see the volume here just increases and maintained itself. 132 on the buy, 137 on the sell. Difference of 4 million. Negative. This one, 102 on the buy, 87 on the sell. Difference of 16 million. And the question again is, why does price action not break above 144.61? This line right here with the power dots have pretty much identified. Well, that's the reasoning, because now we can confirm that they're not going to continue to go bullish. And we can literally take a trade with the utmost confidence and go short. So you could have entered it here and you could have entered it on this candle. This would have been your more conservative entry, but look at the volume. It continues to increase because they're not done. So the longer they take, the more short they go. So what happens here? 155 on the buy, 134 on the sell, difference of 22 million, and it's bearish. It's bearish. So this is a bearish candle with bullish volume. Now, what's so important about this candle, and this is something that one of my clients asked me yesterday because he looks at the SPY. He said, why are the buyers buying below where the sellers are offering? In this similar scenario. And I responded back to him and I told him, the reason why that is happening, as you see here, is because the buyers have conceded to buy at a lower price because they have finished rebalancing their order flow, their book. And so now the sellers have basically a free way. Yes, a free way to basically take this trade and go short. Now, what is so important about knowing where they're going to stop the trade and the fact that they're going to give you 2 candles to do so? Well, as they're coming short, there's an imbalance. Not here, here. Why? Because this is a bearish candle, and the bulls are saying, well, I'm going to give you a chance to drive this thing, but I'm going to slow it down. And then I'm going to kick you, I'm going to beat you, I'm going to twist you, I'm going to turn you, I'm going to dominate you, and I'm going to domesticate you, which is exactly what they did. So they continue to go bearish, but they gave us a signal here that they were gonna slow the trade down. So that means that eventually they may not break below the trend stop. Well, before we were always wondering, would they break, would they not? Now we can tell if they're going to break. Why? Because they're giving us plenty of warning. So this next candle continues to go down, but then remember, after it announces, you get 2 candles and then boom, they make a move. Well, they did come down, but look, every time they came down, the buyers would come in and demonstrate their point of control, their price level, where they're controlling their bids and offsetting the offers that the sellers are giving. So that's exactly what they did here. So what happened in the next candle? What did I say? Number 3, boom, will pop, become bullish. And it did. Again, it showed an imbalance, but it did pop. So they came down one more time. And by seeing this imbalance, which is a bearish candle, and the buyers all the way up here and the sellers up here, the sellers have conceded to sell at a higher price. Oh my God. Is that even possible to fathom in your mindset? The answer is no. What I'm teaching you, it's so outside the box, it's not even funny. Because a lot of guys that teach order flow, they teach you a bunch of numbers and nonsense, and they confuse you. Let's look at that. Why don't we? So what they do is that they take you to order flow trading. Hit order flow trading, hit, let's see, images. And what do we have here? We have this. This is what they call order flow. They're not wrong. And volume profile, which in my mind doesn't work because it doesn't tell you anything. Does this tell you anything? No. Confucius said numbers will confuse you more if you look for more numbers than you should. Well, he wasn't joking. These morons are giving you more confusion than you need. I'm not. Yes, is it important to know where the highest point of orders are offset? Not really, because that shows you just stinking average. Averages don't mean anything. What means something is the price level where the buyers prefer to buy it and the sellers prefer to sell it. None of these guys have this except us. We're the only ones out there that can actually tell you now where the buyers control their order flow in the candle and where the sellers control the order flow in their candle. It is a beautiful thing. So now we're able to not only identify an entry, but we can also identify when it's time to get out of that trade, because that is what will make the difference for us. So now we have a complete toolkit that encompasses volume spread analysis, volume price analysis, volume divergence, and order flow. We were missing order flow. We weren't missing order flow. It was the perception of how we were presenting it that was different of how we are envisioning it now. Perception of the trade is everything. Time, in my eyes, is more valuable than information, because time allows you to evaluate information. And that's why if you see this trade, what is wrong with this trade? Nothing. Well, there is something wrong with it. I really would not have gone long here, but I would have waited for this one, because as soon as this thing came down short, what did they do? They showed me an imbalance. It wasn't here. Here they were driven to go short, but here they stopped it cold, and then here they definitely, this is the candle that would have told me, hey, we're going to go long, which in actuality they did. They ended up going long. I probably would have waited for this candle to get in. And this would have been from 144.42 all the way to 145.24. Not a bad trade, Mo. Not bad, buddy. I have the volume profile. Is this telling me anything? Where to enter, where to exit? No way. Not even close. All this does is just tell me, oh, they're bringing in selling pressure. That doesn't mean anything. I knew that way down here. I didn't know. I don't need them to tell me up here. I need it here. Because if this is telling me that they're going to go long and they spiked, and this was literally at 540, so it was between 530 and 540. This was right when they released the news today. I knew that this was going to go long. Why? Because I had a 2-candle warning. So it was just a matter of time before they went pop. And they popped. They went from 144.75 all the way up to 145.23. A 50 pip run in one candle, which I would have been able to pinpoint and identify based on this algorithm. And now look, it's continuing to go long. So based on that information, do you feel that you can actually now trade with much more confidence? I believe you can. I believe that now it's just a matter of practice. You know, they say that the mother of skill is repetition. They're not wrong when they make that statement. Why? Because the more you go over a chart and examples, the more this will make sense. Now, is this trade short-lived? Not yet. Why? Because it's a 10-minute and it hasn't closed, and at any point, the buyers and sellers can change their point of control in the candle. Now, if by the time this candle closes, they do nothing, well then, what this is announcing is that they're going to flip it in 2 more candles if the point of control does not change. Because while the candle is moving, and while we have 6 minutes in this candle, anything can change. That makes a difference. So let's look for some trade opportunities and see if we find anything. Let's take a look at the futures first, and we'll work our way down. Do some of you have any question? And believe me when I tell you, this is a great moment to ask. Okay, the Dow's coming down. Gee, I wonder why. Question is, would we have been able to pinpoint this trade on the 10-minute? Normally, when you're trading futures, you got to go to a 5. I like the 5-minute more. It's more precise. And in this case, would we have seen this here is the question as they went long. This would have shown an imbalance here, but it continued and then they flipped. Not here, here, here. Would have been a little bit too late. Not quite. This would not have been a trade that we would have looked for. Good trade though. Went from 17,721 all the way to 17,672. That's not a bad trade. Now, could we have pinpointed that this was going to reverse? Yes, as they were coming down. This was the candle, and this was the candle that gave it to you. So now, even without the power dots, we're able to identify trade opportunities that we normally would have missed. Why? Because we can tell when they're going to slow it down and when they're going to flip. So the question is this now going to continue to go long? Well, it's a little aggressive, but yeah, I'd like to say that we're going to have volume divergence to the upside. Why? Because now we can pinpoint where it's coming from. And you can see now on the live edge of the market that the sellers have conceded to sell at a higher price. The buyers are down here, but the seller said, all right, fine. All right, I'll give it up. I'll let you take control. They're not in control anymore. We are. Because, see, they have to drive more volume into a trade to actually control it. We don't. We just have to watch them make that mistake. And then basically take advantage of them. For the first time ever, the retail trader is now in control of the trade. Phoenix Trading Strategies has given you time, has given you evidence, and has given you the ability to control your entry with precision and your exit. But we could not do that if we didn't have fair warning of what was going to happen. So, whether they are communicating with themselves or not matters not to us. All that matters to us is that we're able to see the imbalance in each candle based on their order flow and numerically prove that what they're doing doesn't make sense. So since we missed this trade, we missed it. There's not much we can do. Let's continue. Let's take a look at the bonds. Treasury bonds are special and unique. They have a special place in my heart now. I always thought they were a little bit aggressive myself, but now, it's just like, no, not at all. You're a beautiful thing. You're painting. See, if you like poker, then now you can actually see their hand. I'm giving you the X-ray vision that you need to see what their trade is. Whether they're going to bluff, whether they have a full house, or whether you have a full house and you can see them bluffing, it is just so unreal. I mean, and not to say that they haven't created glasses that allow you to see through, walls, through clothes, whatever. Now we can see that with their order flow because we know where the real order flow is. See, as soon as this power dot formed, I would have been looking as to when it went short as to why. Why is there such an imbalance? See, when you have the buyers up here and the sellers down here, this is really the gift of all gifts. I look at this as a let me see. I look at this as a gift. This candle right here, this one, is what I consider happy birthday. And it's happy birthday every day, the way Richard said. Every day that you can make a trade and make a few bucks, it's a birthday. Well, now, yeah, we look for birthdays, candles all the time. It's funny how they call these candles. We're looking for the right candle to blow. Amazing. Why? Because we can see the imbalance between the buyers and the sellers. So here, this candle alone announced they were going to go long. They gave us a 2-candle warning. 1, 2. And in each candle, they continued to show that imbalance. It was a continuation of the imbalance, that they were not going to go short any further. So you had 2 candles. So this one came all the way down to the trend stop and then halted. And then your entry here in this candle. And then, of course, they went long. So even if you would have gotten in here at 155.30ths, this thing went from 155.30ths all the way to 156.10ths right now. That's a great trade. I'm telling you, this is as you know, even though it's a 1.5, it's a 1.5 in bonds. Are you kidding? That's huge. Now, there have been trades where, I've identified 5, 6 points in this bad boy, but this is a great trade. Now, why did this trade slow down? Because as they went up, at this point, you can see the sellers began to say, hey, I'm not going to sell any higher. I'm going to flip you. I'm going to beat you. I'm going to twist you. And I'm going to turn you around. And that's what they did. They announced it here. 2-candle warning, went one more, and then flipped. And that's why this is going short right now. Now, it's short-lived because I think they're going to use the trend stop as a point of reference to continue to go long. Because if the buyer's point of control for the buyers was way up here, then I'd say, okay, this is going to slow down. But it's still in the middle. And so we have one more candle besides this one for it to go down. And if it doesn't, then it was because they announced it here. This was the candle, even though they went short, and they did announce they were going to go short. But this one announced it, this one announced it, this one announced it. So they really have to break below this level to really come down. And even when they're down here, you can actually identify now the support level based on the point of control between buyers and sellers that we didn't have before. So now, along with the pivots, we're able to forecast the price level that they're going to be trading at, more or less. With a little bit more practice comes skill and fine-tuning of what you're looking for. And then it all comes together. So let's take a look now at the SPY, because I've got a few Australian clients that love the SPY. And I'm sure he was looking at this from very early on. So let's see. Could this trade have been forecasted before it actually occurred? Because they gapped. And I've seen them gap at this so many times, it's not even funny. And the answer is yes, right here in this candle. This candle, even though it went short and they went long here, the sellers announced they were not going to continue to go long anymore. And so they gave basically a 2-candle warning. 1, 2, and then 3 short, and then the market opened and gap. So this thing went from 52.46 all the way down to 51.82. That's a great trade. Now, could you have forecasted the reversal? Yes, right here in this. As soon as this candle showed the imbalance, and not the fact that the sellers were so close to the buyers. No, the fact that this is a bearish candle and the buyers held their point of control in the candle up here, giving us a 2-candle warning. Well, on 5 minutes, that's 10 minutes for you to get your act together and find the trade. 1, 2, boom, 3. And they did. As soon as you see that they're bullish, you take that trade. This trade went from 51.85 all the way up to 52.11. And as soon as the power dots formed, it would have given you another idea of what is going on. Is this really happening? No, this one did not, because we go back 2 candles. 1, 2. Couldn't see it. Well, on the third one, yes, but it was iffy and was not a big trade. And now, of course, we're seeing the first power dot. So we go back to 1, 2. What are they showing? An imbalance, a perfect imbalance, a gift of imbalance. This is the one that says, I'm here. This is the candle. This is the one that says, we're going to slow it down, we're going to twist it, we're going to flip it. This one did too. Why? Because the buyers are up here, the sellers are down here. When you don't see a hash, it's because the hash is down here and same price level, they've just formed too many, and so that sometimes we get a little bit of a gap. Here, so this one gave a 2-candle warning. 1, 2. Now here the sellers have conceded to sell at a higher price, but in reality, you got the first power dot, and this is peaking at a, so this would be a double top. I'm not looking at it from that perspective. I'm looking at that this one told me that they're going to flip it. And now you see where the point of control is for the sellers. It's right in the middle of this bullish candle. So does it make sense to look at the volume? Yes, by all means, look at it. 725 million on the buy, 612 million negative. You have 113 positive, which are orders that did not get filled, but they drove the candle up. This next candle. 462 million on the buy, 196 on sell, a difference of 266. That is excessive order flow that did not get filled. Why? Because the sellers are down here and the buyers are bidding up here. And the sellers aren't filling those orders because they're down here. Then this next one, 376 on the buy, 359 on the sell, a difference of 17. And you can see that the surplus volume begins to diminish. And now we're here, 398 on the buy, 299 on the sell, difference of 99 million. Why are they not breaking above this level? That's the question that should be answered, which has not been answered. And that's the reason why this one has the potential now of reversing and coming down. That's it. That's the secret. Not a complicated secret. I don't think so. Because now you're looking at information that you never looked at before. This thing evaded you. You were missing part of the decision process. Let's take a look at the Russell now. I like the Russell. Russell's special. I got one client that trades this thing, and it's a madman, but you know what? Can't really deny it. Is this going to go short? Yeah. You have an imbalance here in this candle and here. So this one announced it. If this announced it, then doesn't it make sense that this will follow through and come down? Yes, the answer is yes. I'm not long on this. I'm short on this. And why? Because each time the sellers have said, we are not going to sell at a higher price. I don't care what you say. You're going down. And you're going down for the count. And so let's put it to the test and see if in actuality that's what they're going to do. Any questions? But while we're doing this, let's take a look at a few things, because this is where it becomes really, really, really tricky and important. Let's go over the process. Where is your point of divergence? In actuality, it's here, this candle, but this one shows a lot too. Why? Because it was still bullish. Let us make the line. So, what is happening here? A lot of things, actually. See this candle? And let's pull the volume data box out. Where are you? Come out, wherever you are. So let's look at this candle. This one's, you know, somewhat important to some degree. Not completely, but to some degree. You have way too much volume here. So let's just go by smaller numbers. 2,754 on the buy, 2,537 on the sell, difference of 217. positive order flow that should have gone long. Well, this didn't go long. This came short. So this is a bearish candle with bullish volume. Ooh. Assumption, next candle will be bullish. Yes, the answer is yes. 1,238 on the buy, 880 on the sell, difference of 358 in excessive surplus orders that were not filled. Sellers said, we are not going long, which is exactly what they didn't do. Next candle, and look at how that candle just comes down. Come down, baby, come down. Show us that volume divergence. Make it a happy birthday. So this candle, 982 on the buy, 893 on the sell, difference of 89. Again, surplus order flow to the upside. But the sellers are saying, I'm not going to sell to you any higher. I don't care what you say. I'm going to twist you. I'm going to beat you. I'm going to domesticate you. I'm going to dominate you. Just get ready, because when I flex my muscle, it's going to hurt. And then this one. So did this give us a 2-candle warning? Yes, it did. 1, 2. Went up, came down, and then this one, short. 363 on the buy, 247 on the sell, difference of 116. Did it go long? No, it did not. Why? Because the definition was, it was already defined to go short. Now we're up 18 ticks. Now, the buyers are up here. Their point of control is here. Not good. That means that we have maybe one more candle to the downside before it goes back up. Does it matter? At this point, not really, because we're in positive ground. So that means that we can take advantage of this trade and be done with it. Question, when you're going to take a short break, can you show your data series so I can see your chart settings? I'm trying to fine-tune mine on Ninja. Okay. So we'll do. So here, for instance, everyone assumed long. This told us no, short. They're gonna change. They're gonna twist it. Now we still have 2 minutes in this candle, and the point of control of the buyers can change in between that time, depending on how defined they are of accepting to buy at a lower price. Because the sellers already came in to flex their muscle and said, we're going to go short. We don't care what you say. We're going to take you down. We gave you a 2-candle warning. Deal with it. So for those of you that are trading E-minis, this is the perfect gift. Christmas came early, boys and girls. Make no mistake about it. It came early. So if you're scalping, this is a great scalping tool. You're able to pinpoint these trades way before anyone can pinpoint, way before the banks can even pinpoint them. I don't know, you tell me, is this something that you think can change the way you trade for the better? That's a question that you have to decide for yourself. There's a saying, you can only take the horse to the water, but you can't make him drink it. Now, I'm not calling you horses. I'm just saying that's the saying. I can only guide you to the information. I cannot make you accept it. I cannot make it relevant for you unless you decide to make it relevant for yourself. Because if it influences the way that you change your decision process for the better, and it improves your results in trading, then we've accomplished a lot. See, now that we know this has happened, and they announced it twice here, so this is 1, 2, this is number 2, we're waiting for number 3. I no longer have any interest in sustaining this trade here, even though I know that it's got to come down one more time. But as soon as it came down, I would have been able to exit. I still think this will come down one more time before it goes up. But it's already announcing that it's going to go up. So if it's announcing that, so now you're no longer in this situation where we're like, come on, one more candle, one more candle. No, 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 no. No, that doesn't exist for us anymore. No, now we know the candle. The candle is ours. The trade is ours. They're going to do exactly what we want them to. Not because they want to. It's because they don't have a choice. They've already defined their plan of action. So we can see the war between them. You know, this is better than a video game because you don't really have to play. You just have to watch and see the play. And that's what makes the difference. So did this announce that it was going to go long? Yes, it announced it here. It announced it here. This is number 2. I still think they got to come down one more time before they go long. We have 4 more minutes on this candle. But at least we know that this is the price point that they've defined that they're going to hold. But I still think they got to come down one more time. Just one more. See? One more. Why? Because they got to give us 2 candles before they go long. So are you scared? You shouldn't be. You should be jumping for joy. They should be scared of you now. They should fear the ground that you walk on. Now, can the same principle be applied in higher time frames? Yes, it can. Can it be applied in Forex? Of course it can. Can it be applied in stocks? You betcha. Indeed it can. Have we taken trading to the next level of order flow? The answer is yes. We are now masters of order flow trading, of volume spread analysis, of volume price analysis, of volume divergence. No one can touch a hair on what we got. We are so exclusive, it's not even funny. Exclusive to the level that I won't let you buy this software unless I speak to you personally. I have to believe in you. I have to believe that you actually want to be successful and want to trade successfully. Otherwise, I won't let you have it. Because if I don't hear a tone of dedication, a tone of aspiration, a tone of ambition, I'm wasting my time with you, and so are you. But if I hear those 3 components, those 3 statements coming out of you, then I know that I'm dealing with someone that wants to change their life. And I want to help you change your life. And look, I got out early. I only made 6 ticks. I probably would have walked out with 15 ticks on this trade. Do I feel bad? No. Why? Because it's a 1, 2, 3 effect. This is going to go long unless the point of control in the candle changes. That's it. There's the secret. Let's take a look at gold. I like gold. Me and gold are buddies. We're best friends now. Even the US CAD. So let's take a look at this. Is this trade one that we would normally take? Good question. This one would have been a trade that I would have taken. This one here, and this is a daily level. This is a mid-range daily level, and this is a daily level. So they've been very active. From 1148.70 to 1140. An $8 move. Ouch. Anyone that was on the wrong side hurt. If I missed it, it wouldn't have mattered. I would have still been able to pick up $3. And now, did this announce as they were going short that they were going to go long? Yes. It was right here. This candle. This is the one that showed the imbalance. Let me box it in for you. This is the one. This is the gift. Now, which one announced short? Can't really see it. Quite honestly, I can't say that this announced short, and I can't say that this announced short. I can say that this one did, but it's got to give a 2-candle warning. So that means it's got to go up one more candle and then flip. So does that mean that they're going to use this ATR level, this trend stop, as a resistance level? More than likely. Am I jumping on a trade right now? No. No, you couldn't get me to take that trade right now because I'm waiting for the perfect setup. That's right, 15 pips will give you a nice happy birthday breakfast at Denny's, John. We like happy birthdays at Denny's. I prefer the senior discount, but I'm not there yet. So, yes, will it make a difference in your trading? The answer is yes, it will. That's the difference. So, right now, what you have to do is basically come to terms with it. Accept it for what it is. You're in a great place. What are the horizontal lines on the candle bars? These little dashes, that's an algorithm that shows you where the buyers prefer to buy at and the sellers prefer to sell at. Not a moving average. Do not confuse that ever for a moving average. Ever. We do not deal in moving averages here. That's offensive to the ear. Why? Because moving averages have been counter-programmed. So the dashes basically show you an imbalance. And you'll be able to go over this video over and over again and you'll see that. But yes, right now, why am I not going short? I just didn't see the trade. Just because this one said short, I'm going to jump in? No way. I still think this is going to go long one more candle before it goes short. So I'm going to wait for it. I'm not emotionally attached to the trade anymore. I'm going to show you how to become so metallic in your decision process that it's going to kill you. Now, this trade here in silver, where is it announcing to go long? Right here. 2-candle warning. 1, 2. Boom. 3, long. Is this one going to continue? More than likely. To the upside, yes. Should we put it to the test? Why not? Let's. Why did I say that? Because the point of reference for the buyers, as you can see, the green dash right here is here. This is a bearish candle, yet the buyers do not want to buy at a lower price than this, and they're announcing that they're going to flip it. They're announcing that they're going to twist it. They're announcing they're going to control it, and they're going to drive it up. So, as before I said, normally when we would take a trade based on power dot formation, we would wait for the 4th or 5th candle. Why? Because we were waiting for price action to break below the trend dots, which still would not have been a bad trade, but we would not have been able to forecast that the trade was going to end. This candle is the one that told us it was going to end. Why? Because the point of control of the buyers is up here. The point of control of the sellers, where they like to sell, is down here. This is a perfect imbalance. So what did they do? They went down 1, 2, and then the third one. They went up, they came down, and they still held it, but they're still trading now above the trend stop. And this one went long. So this one announced it. This one continued with it. They gave us, in this case, a 3-candle warning, and then they went long. But the sellers are still up here. The buyers are down here. This is the one, this is the one thing that I don't like sometimes, but I know that it's because of the change in direction. So now, am I scared of being down 2, 3 ticks, 5 ticks on silver? No, I'm not. Why? Because I'm able to forecast what they're going to do. Now, what I don't like is see how the trend dots are down here and the candles have continued. I really wanted this one to break above here, above this trend dot, to close above it. And I would have preferred this candle opening above the trend dots. It didn't do it. Not yet. And of course we have, what's his name speaking right now, because we did look at what he had to say. What did he have to say is never relevant. Had good numbers for Chicago PMI, and we're waiting for, William is speaking right now. We have revised consumer sentiment, which is not good for the U.S. Inflation expectations are as expected, and that's pretty much all she wrote, boys and girls. There is no more news. And look at silver. No, it did not go long. Did I say it was going to go long? Can I have a happy birthday? You can have a happy birthday too. For those of you that have the software, happy birthday every day that you trade, because your birthday came early. Now, is volume profile giving me anything that I can use here, this information, to make my decision process here? The answer is no. N-O. No. Do we have volume divergence? Yes, we do, boys and girls. That started right here. I mean, you really just, when you think about it, what's going through your head is, wow, has this maniac actually done it? I'd like to think so. I'm not a maniac. I'm a little insane. I'm not going to kid you. There has to be a little bit of madness in order for you to figure out something like this, because let me tell you something. The programmers that they've hired are financial engineers, and these guys are freaks of nature. Mathematicians, PhDs in physics. I mean, these guys think in levels of numbers that you and I would never ever be able to come close until now. So did I reverse engineer their whole thought process? Yes, I did. Oh, you betcha. Have I proven that anything created by man can be decoded? Yes, I have. Have I proven that now you can trade with more confidence? I believe so. The question is, can you prove it to yourself now? If knowing that this is right in front of you, right at the grasp of your hands, can you wait another day to live without it? The answer should be no. I need that thing right now. Where do I sign up? And so what I'm going to do is I'm going to give you my email. My email is ricardo@phoenixtradingstrategies.com. My Skype is ricardo@pfg. And my telephone is at 818 here in the United States, 431-1357. And it's my birthday, so you have, let me see, once we finish, which will probably be within half hour, 45 minutes, after that, you have 3 hours to give me a call. Because after that, my phone is off because I'm meeting one of my college buddies for lunch, and I'm taking my kids with me today because it's my birthday. And no, it ain't going to be at Denny's, John. As much as you would like it. Did you send me my present, John? Now, for those of you that feel the need to send me a gift, well then, I'll have to send you my address. But yes, it is amazing, isn't it? I mean, it is just a gift from heaven. Literally a gift from heaven. Let me tell you something. There is nothing that happens by accident, but only by the will of God. And I've waited 12 years for this moment. This is by far, I'd like to say, the pinnacle of my career as a trader, as a broker. I never thought that I would see this moment. Oh, thank you, John. I appreciate it. Yeah, the post office, they're special. The post office, they are special. So yes, now that we've seen that silver didn't do anything, but it did do what we wanted it to. Don't really need to prove anything more. You know, I wish it would move a little further, but it's Friday. Everyone's taking a profit. So are we. We want to thank silver for that nice little trade. You know, imagine if you would have had 5 contracts on that bad boy. They would not be liking you at all. Didn't do the Wednesday webinar. I had a situation that I had to handle and I got here too late. Let's take a look at crude. Crude has always been one of those miserable markets that just slaps you, hits you, beats you, and demoralizes you. Not anymore. No, no, no. No more. So, is this going long? The answer is no, it's not. This is going to continue to go short. Why do I say that? See how aggressively they came down? The buyers conceded to buy at a lower price level. And here they reversed it. It's still a bearish candle, but look, the buyers are here, the sellers are here. Here, the sellers in this candle announced, no, we're going short. The trend is too strong to the downside. Now, normally you'd get one more candle up, or in this case, we may not get a candle up because the intention is to come down. So I wouldn't touch this yet until we actually see where this candle is going to close. But if you see the point of control here, this is announcing it. So you got one and one more candle after this. And then it's bye-bye Charlie. Would I go long here? No. No, 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 no. Look at the VIX. You want me to look at the VIX and the stocks? You know what? I don't trade stocks. I don't have them. We would be getting delayed information. So what I'm going to do is I'm going to add it next week, and we'll take a look at stocks. How's that sound? But right now, I just don't have them, you know. I just don't like trading them. Can I see the same anomaly? Yes, make no mistake. You know, this is the DAX. You know, I always told my students, don't trade the DAX because it's going to hurt you. They're not nice. They're very mean. They're despicable is what they are. And it's just the way that they drive that market. I mean, you know, it's just so aggressive that it gives you what I call is an adrenaline rush to trade it. I don't need adrenaline rushes in my life right now. I've got a 4-year-old and an 18-year-old for that. You know, the 4-year-old thinks he's 18 years old, and the 18-year-old comes down to the 4-year-old level sometimes. And so between the both of them, when they're both at each other's throats, that's an adrenaline rush as is. I don't need it anymore. So, would we have forecasted short on this trade? Yes, this would have been the candle right here. Went long. The buyer's point of control is here. They did go short here. Did they announce it here? No, they did announce it here though, but it was a little bit too, you know, would I have taken it short here? No, but after this one, yes. probably on this candle is where I would have gotten in. Now I'm a bit late. Have they dropped significantly? Yes, they have. Will they continue? It's Friday. Can't really tell. You know, it's one of those things where you just want to say, I just can't take it anymore. Let's take a look at the Dow real quickly, and then we'll go into FX. And look at the Dow. It came down even further. Boy, they just don't have any good news on this thing. It's just pretty bad. It went from 17,723 all the way down to 17,650. 80, almost 80 points. Not a bad trade. Let's look at the yen. Now, for those of you that are motivated, and you should be motivated, it's my birthday. If you're not motivated on my birthday, I don't know what to tell you. Because I'm giving you the perfect birthday gift before your birthday. On my birthday, to be precise. So, the yen came down. Did it announce it? Yes, it did. We got it right here on this candle. It went long, but it announced short. 1, 2, and then it never went above this daily level, and it came down like a stone from 120.64 to 120.40. That's 24 pips. Not bad for a Forex trade in the morning on a Friday. Would I take this trade now? No, I'm late. Can't really touch it. 5 minute. And normally I like to look at these on a 10-minute or even a 15-minute. FX, you will look on a higher time frame. A 10 and 15-minute are usually your best bets. Those are usually the ones that you want to see. I want to see you trading with this. I want to see you succeeding with this. I want to see you making money with this. I want to see you call me in the middle of the night telling me that you have made money. I want to hear your story of success. That's what I want to hear. When I've taken this trade, yes, it announced it here. Actually, I would have taken it up here and here. It would have been a great trade, actually. From 120.68 to 120.40 would have been 28 pips, to be precise. Could I have predicted this trade going short? Yes, here and here, especially here. 2 candle warning. 1, 2, short. Boom, all the way down. From 121.36 all the way down to 120.33, 100 pips. Let's take a look at my nemesis, the US CAD. I hated that one with a passion. And I say that so passionately because it has beat me, domesticated me, demoralized me, slapped me, made me feel like a child. No longer. I'm in control. That's the difference. So, would we have taken this trade short based on this candle? Yes, you betcha. No way around it. This one long, not really, but this one short from here, yeah. Based on this, all over it. Why? Because they were at a 720-minute mid-range level, never broke it, retested it. They gave the signal, and bam, from 131.88 to 131.50. Not a bad trade. So now you're going to give me a moment, and I'll be right back. Analyze this, and I'll be right back. Sorry about that. Back. So, is there a potential trade here? Yes, there is. But there's a question, so let me address the question first. Can you talk about how you came up with this indicator, or was it an evolution for this indicator? This is a brand new indicator. No, I'm not going to explain to you how I came up with it because that's proprietary information. The only thing that should matter to you is that it works. If you want it, there's a price for it. You can email me, and I'm more than happy to give you that price for the whole suite. But no, I'm not going to go into details of how I came up with it. That is something that is proprietary. But can you trade with it? The answer is yes. Is the information accurate? The answer is yes. Can it be numerically verified? The answer is yes. It has been. It can be. And it's working. That's all that matters at this point, I believe. So let's get back to this. So this is a monthly level right here, this white line that I drew here previously. Now, let's take a look at the volume here, especially here. So we have 212 million on the buy. We have 244 million on the sell. A difference of 32 million. They did not come down. In this one, they have 17 million on the buy, 16 million on the sell. Not a lot. Again, they did not come down to challenge this price level. Now, the distance between the power dots here and the candles is very significant, and that carries a lot of weight. Now, this candle here, was long, but you can see the buyers were way up here. They conceded to come down. So that's why I'm saying when I see something like this, it just doesn't add up. Just doesn't make sense. And look at the volume, 204 million on the buy, 189 on the sell. 15 million to the upside, and it did go long. Would I have based going short on this candle? Not really. Here, yes, I would have based my decision to go short from here to here, but not here. I'm looking for a reason to go long. So would this candle have given me that based on the fact that it went short? It's a bullish, still considered a bullish candle with bullish volume, not bearish. No, didn't fit the profile. Did this one? Bearish candle with negative volume. Yes, the buyers, although the buyers here are trading below 50% of the candle, and that, to me, is very significant and a reason why I would not go long on this yet. This one, the buyers are right here. They are slowing it down. We have power dots, but I'm afraid that this trade to the upside is short-lived. I'm afraid that in actuality, what they're going to do is that they're going to twist and come right back down. Why? Because this is a bullish candle, and I have a point of control of the sellers right here. This is the price level that they prefer buying at, which is right smack in the middle. So will that announce one more candle before it goes short? 1 to 2, sometimes even 3. FX is a completely different animal altogether. It is not the same. Not the same at all. So it's one of those things that just does not make sense. So to that person that made that question that I answered, I'm going to expect a phone call from you. If I don't get a phone call from you, then I'm going to kick you out, because you're making a question that only a programmer would make. A programmer that's trying to copy what I've done. You can't copy what I've done. It's impossible. You don't have the brain power for it. But I didn't like the tone of the question. So you have my phone number. If not, come Monday, you will be exited from this. It's my birthday. So let's get back to this. Would I go long here? No, I'm not comfortable going long on this. Did the point of control change? Did the sellers accept right now to sell at a higher price? They did, but the buyers, well, now they've changed. So yes, now, but still, it's one of those trades that I'm just not comfortable yet because I didn't get the right signal. I didn't get the right setup. It's the setup that matters to me. If I don't have the right setup, I don't have a trade. Regardless of whether the power dots, regardless of whether I have a signal here, it's just not clean. It has to be the right setup. And if it's not, then I really don't have much to say or do beyond that. Oh, good. Well, then you'll remember not to ask a question like that because most programmers ask that type of question. And those are the ones that I usually tell them, go learn, go pay your dues, buddy. So, no, I'm not long on this trade. It's Friday. I'm uncomfortable with it. I'm afraid that it's short-lived. Even though the point of control did change, the sellers did accept to sell at a higher price, and you can see here, I'm just not comfortable with it. Is there volume divergence? Yes. Based on this candle, look. Based on this candle, yes. I'm just not comfortable with it. See? And because it didn't break above it, I'd say it's got to come down from it. But let's put me to the test and see if I'm right. And you see the trend dots, the trend stop right here? See how it's angled to the downside? This angle to the downside is very aggressive to me. And that's what, for me, I would have needed this to pop way high, and it didn't. So you have to look at each feature, each detail tells a story. And it has to make sense. Because if it doesn't make sense, you don't have a trade. That's the bottom line. So, no. Do we have a trade to the upside? I don't think so. I'm not that. I wasn't sold on it, quite honestly. I wasn't sold. And this candle will determine whether I'm right or wrong. Now, we do have a pivot here, which is significant, but it's only significant if the trade continues. And all this does is tell you that this was the point of reference for this thing to take place. So, like I said, it may be one of those trades that is short-lived. I was thinking another one or two candles, but because it didn't break above this, I wasn't that sold on it. So we'll see. But since it opened above this, this thing could potentially run. But again, it's the US CAD. It has a mind of its own sometimes. So we'll see how. I'm actually curious to see how far it goes. See, the sellers haven't appeared, and that puts them here at the very bottom. The buyers are up here and the sellers are up here, so this is a discrepancy that we're looking at. But they announced it here, though, that they were going to slow it down. Question with FX is that it usually takes 2 to 3 candles. Oh yeah, we looked at crude. I said crude was, was just very, very strange. And see, now the sellers came in. And you see the point of control of the sellers right here. right in the middle of the candle again. But again, it's Friday. And normally, we would be taking this trade long actually right here on this candle. Why? Because they broke right above, in this case, the trend dots. Even though we would prefer them to have flatlined and not be in an aggressive angle the way they are. That would be the only difference, or a major difference, actually. And it's just not there. Not yet, at least. So that would have been my only reasoning to go long before. Where now, that is the least of my concerns. Now I'm looking for the type of evidence that cannot be seen out there. I'm telling you, institutional traders would kill for this information. Kill right now for this information. Because they have millions at their fingertips. And yet I'm putting this at your fingertips. And there it is. Can I get a happy birthday? And the crowd goes wild. Like I said, the software doesn't lie. The accuracy of identifying trades has become so amazing. Oh, I'm 44. I just turned 44 today. Amazing, isn't it? I'm getting old. But you know what? This is actually a perfect age for me because I've been so immature all my life. I I guess I just love life more than most people, that I enjoy it. Some of my best friends say that I just joke around too much, but and maybe I do, I just love life. I make my son's life miserable because I make him I make fun of him. I joke around with him. I bother him when he's studying. He's like, "Dad, Dad, please, please grow up." Oh my God, it's just, how old do I feel? Quite honestly, for being 44, I feel like I'm 30. My late 20s, early 30s. I don't feel I'm in my 40s. Now, how do I look? I look like I'm in my 40s. That is very, very true. That is very, very true. Age is only a number. I agree with you. But you know what? If it wasn't for age and time that comes with it, we would not get the most important piece of information: wisdom. That can only be acquired through age and the experiences that life gives you. I think that's the one gift that God has given us: time. And so we're done with this trade because I don't think it's going anywhere any further. And I don't like the point of control of the buyers being up here, the fact that they came down here. So, being that said and done, we didn't make 10 pips, or actually we did. We made 10 pips on that. So this trade goes out to my good friend Mahesh, because he loves the cat and I hated it in the past with a passion. And I say with a passion because there's no other way to describe the damn thing. It's just a monstrous pair that just rips people limb from limb. Like I said, It's not one that inspires, but demoralizes. So it's very unique from that perspective that when we look at, you know, trading now, it is so different than before. So different. And so all I can tell you is that life just became more interesting than ever. Why? Because now you can actually look forward to the trade instead of fearing it. We don't fear the trade anymore. It's just not a part of our thought process. So for those of you that owe me a present, there's my address. You can put it out to Phoenix Trading. Address it to Phoenix Trading Strategies. Attention, Ricardo Menjivar. So now you have it all. It was wonderful sharing my birthday with you and sharing this gift of information that we now have. I hope that I'm able to inspire you the way I've been inspired by you. Because there's a saying, only when one shares his knowledge and wisdom can one actually grow and become wiser. And you have allowed me that gift to share my knowledge and wisdom, and for that I thank you. My address disappeared. Let's try that again. It should not have disappeared, but let's continue one more time. Hold on, let me put it down. Oh, wait a minute. No, it should be there. Sweet D. Hard. Nice. 49 zip code is 91405. There it goes. Went in again. So, being that said and done, thank you. Thank you for joining us today. Thank you very much for the birthday wishes. I'm actually going to enjoy my lunch and my dinner tonight. Have a great day. I look forward to seeing you guys on Monday. And for those of you that have dim sum today, for those of you that are interested in the software, send me an email. I will get back to you probably tomorrow. Today is my birthday. So for the next 3 hours, I will be here on my computer. And after that, I'm done for the day. So thank you. Have a great, great weekend. Yep, you can give me a call tomorrow, Rich. We can go over and get your charts all set up. Thank you again for joining us here at Phoenix Trading Strategies. Always a pleasure having you.